Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is July 19, 2024. This is the Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. Let's get started. I'm going to focus on today's tactical look at the euro versus US dollar on the hourly chart. In the trading this week, the price moved to a new high at 109.474. I lied. I'm going to go to the daily chart right away here, and this high right here took the price above this high right here, which was going back to March 21st. But you can see the move to the upside was brief, and the price started to rotate back to the downside and trading yesterday. We came up toward that 109.419 level and found early sellers against that level, moved sharply to the downside, and today we're seeing a further move to the downside at a more modest pace, of course, than we saw from yesterday's decline. But this 109.419 level was broken, could not be sustained, and the price started to rotate back to the downside. We can see that on the hourly chart, going back to that chart. And here's the 109.419 level right here. You can see how the price moved above it, fell off, moved above it, fell off, and then in trading yesterday, the price high came up toward that level and then found sellers where it started slowly and then moved down to the 100-hour moving average, then ultimately broke below the 100-hour moving average right here and rotated to the downside and trading here today. That moved to the downside, moved down toward the 200-hour moving average. That's a green line on the chart. The last time the price was below the 200-hour moving average is right here on this little break right here. Kind of looks like this little break right here, and that started to move to the upside through here. So the question is, is this enough for the correction, or are we going to move down further below that level and maybe move toward our 38.2% retracement of this move to the upside? That's going to be the question, and this level is going to be the key level on a key barometer today and going forward. If we move below the 200-hour moving average again, we're likely to see more momentum to the downside, so be aware, be prepared. Now, on the top side, the corrected move off of the 200-hour moving average did come up to test these swing lows from yesterday's trade. So that's sort of makes sense from an intraday perspective. It's not really yesterday's trade; it was Wednesday's trade. And yesterday's trade as well, the low came down toward that level. So we do have these two lows, low, low, low right here. We broke through it here and then use that level as resistance here. So the 108.94 is a resistance target that if we get through, maybe we look toward a retest of the 100-hour moving average. But I would expect to see sellers against that level, and then we'll see what happens at the 200-hour moving average, whether they break below that level and move down toward the 38.2% retracement. So that's my tactical look at the euro versus US dollar. Let's take a look at the dollar versus yen. And for this currency pair, I'm going to look at the hourly chart. Recall from yesterday, we were looking at this area right here, this little narrow swatch of a swing area. You can see how the market was found resistance against that level and then found support against the level before moving higher. In trading this week, the price traded above and below it initially, but then used that level as resistance here and here. We broke above that level in trading yesterday, and that opened up the door for further upside toward this falling 100-hour moving average. That's a blue line in the chart. We have traded above and below it in trading here today after breaking to the upside. We did find resistance sellers against what is normally the 38.2% retracement of this trend move to the downside. So that worked as planned. And then we started this up and down above and below the 100-hour moving average. We're back above the 100-hour moving average, as you can see, and above this swing area as well, which gives a bias more of a bullish tilt to it. But there's work to do. That work to do resolves around getting above the 38.2% retracement. If we get back above that level, then we start to look toward perhaps a 200-hour moving average up through here and the 50% retracement as well. So be aware of those levels. But the 38.2 is key. The 100-hour moving average is key, and as is this swing area through here near the 157.45 level. Let's look at the sterling versus US dollar last. And we'll look at the 4-hour chart for this currency pair. Actually, let's go to the daily chart first. And we saw in trading this week, the price moved above the 129.95 level, the 130 level. That level was this high going back to the month of what is this? The month of July, and then we came up to it in trading last week and earlier this week. staying below the 130 level, staying below the 120.95 level. We did move above it in Wednesday's trade and opened above it, or traded above it in Thursday's trade as well. But then the downside yesterday forced the price lower. This high right here, which goes back to the month of March, is being tested and trading here today. The level comes in at 128.93. So be aware of that level. Let's go to the look closely at the 4-hour chart here. The 128.93 level is right here. That level corresponds with this high right here, and you can see how the price has bounced early off of that level, but that level is going to be a key level. Though, if you move below that level and then move below the 38.2% retracement, that would open up the door for further downside. Now, on the top side here is the 129.95 level. You can see how not only did we break below the 130 level, but we also broke the 129.95 level here trading yesterday, and that opened the door to the downside here. So be aware of this level right here, 128.93 on the top side. The price is going to have to move its way back above the 129.95 and the 130 level to show that the buyers break in trading here this week wasn't just a one-off type break. By the way, we did also break above the top side trend line here in trading when we moved above the 130 level, above the 129.95 level. So it's a key level going up. It was a key level going down, and it's going to remain a key level on the top side going forward. So watch this level at 78. We'll get below it. It's more bearish, and we look for further downside momentum. My name is Greg Michalowski with the Kickstart video, taking a look at the 3 major currency pairs. Good fortune with your trading. Bye-bye now.